Well, good morning. Yogendra Rana here. So the topic of the day is insurance broking system in India. Insurance broking system in India. An insurance broker acts as a middleman between insurance companies and people who are in search of purchasing insurance policies. So they are experts who help people in buying the suitable insurance policies as per their needs and requirements. So the insurance brokers also suggest and guide people about the nitty-gritties of the policies which are beyond the understanding of the layman. Insurance brokers are regulated by Insurance Regulatory and Development Authority of India and provides advice giving services to their clients on the matters related to insurance. Insurance Brokers Association of India is the sole representative body of licensed insurance brokers recognized by the Insurance Regulatory and Development Authority of India. So the insurance brokers shall have the word insurance broker or insurance brokers or insurance broking in the name to reflect their line of activity and to enable the public to differentiate insurance brokers registered with the authority from other non-registered insurance-related entities. As far as categories of insurance brokers are concerned, there are 5 categories of insurance brokers which are direct broker life, direct broker general, direct broker life and general, reinsurance broker and composite broker. So the number of insurance brokers as is published every year in the annual report or on the website of the IRDAI. So as far as the number of at the end of financial year 22-23 is concerned, total registered brokers were 788 as on March 31st, 2022. Out of this, the valid brokers stood at 562 and remaining 146 are not in force as on March 31st, 2022. So the 562 valid brokers comprise of 494 direct brokers, 63 composite brokers and 5 reinsurance brokers. So total 76 new certificate of registrations were issued during the period from April 1st, 2021 to March 31st, 2022. Out of which 74 were direct insurance brokers, 1 composite insurance broker and 1 reinsurance broker. During the period, 166 insurance brokers registration were reviewed. As far as insurance broking compliance is concerned, first of all, there is an important issue of capital requirement for insurance brokers. So, respective insurance broker is required to have a minimum paid up capital of, in case of direct broker, rupees 75 lakh, for reinsurance broker, rupees 4 crore, in case of composite broker, rupees 5 crore. So net worth requirement for insurance brokers means the net worth of an insurance broker shall at no time during the period of certificate of registration fall below rupees 50 lakh for direct broker and 50% of the minimum capital requirement or contribution or equivalent specific under regulation 19(1) for insurance composite broker. So deposit requirements for insurance brokers means every insurance broker shall, before the commencement of their business, deposit and keep deposited with any scheduled bank a sum equivalent to rupees 10 lakh for direct broker, 10% of the minimum capital or the contribution specified under Regulation 19(1) for reinsurance or composite broker in fixed deposits, which shall not be released to them without the prior written permission of the authority. The compliance of various laws is also there. Means the insurance brokers shall comply with IRDAI Insurance Brokers Regulation 2018, Insurance Regulatory and Development Authority Act 1999, Companies Act 2013, or applicable act as per its constitution and circulars. So guidelines and any other restrictions issued thereunder from time to time by the authority. Maintenance of professional indemnity or the PI insurance is also required, because as far as the category of insurance broker is concerned, say for example direct broker, 2 times remuneration received at the end of every financial year subject to a minimum limit of rupees 1 crore and at least rupees 50 crore if twice the remuneration limit is equal to or more than rupees 50 crore. As far as the reinsurance broker is concerned, 2 times remuneration received at the end of every financial year, subject to a minimum limit of rupees 4 crore and at least rupees 75 crore. If twice the remuneration limit is equal to the more than rupees 75 crore. For composite brokers, 2 times remuneration received at the end of every financial year, subject to a minimum limit of rupees 5 crore and at least rupees 100 crore if twice the remuneration limit is equal to or more than rupees 100 crore. So under professional indemnity insurance, it is to be noted that the uninsured excess in respect of each claim shall not exceed 5% of the capital employed by the insurance broker in the business, and the AOA and AOY limit shall be 1 is equal to 1. So further, the retroactive date shall begin from the date of grant of license and certificate of registration. So as far as filing of the return is concerned, every insurance broker shall on before 15th of April or July or October and January each year furnish to the authority quarterly return. Then every insurance broker shall before 31st October and 30th April each year furnish to the authority the certificates to be certified by the auditor along with the half-yearly return. And the insurance broker shall file periodical return without fail within the time specified as per the formats, and any false or wrong certificate or concealment of facts that in the certificate submitted to authority shall attract penal action as specified under these regulations. Appointment of compliance officer is must. In case of reinsurance and composite broker, it is mandatory that the insurance broker shall have internal audit system and designate a compliance officer who is an employee of the insurance broker. It is mandatory for an insurance broker who in a financial year earn more than rupees 5 crore remuneration, including reward, to have a designated compliance officer who will be responsible for the internal control and system. The company secretary can also act as compliance officer of insurance broking company. A reinsurance composite broker sharing a brokerage with a foreign broker for the placement of risk means the reinsurance composite broker registered with the authority shall not share more than 50% of the remuneration with the foreign insurance broker for the services obtained from them. So as far as remuneration and reward to be received by an insurance broker from an insurer is concerned, for direct insurance business, the payment of remuneration and the reward to an insurance broker by an insurer shall be governed by the 3 regulations notified by IRDA by notification dated March 26, 2023. So IRDA payment of commission regulations 2023, IRDAI expenses of management of insurance transacting general or health insurance business regulations 2023 and IRDAI expenses of management of insurance transacting life insurance business regulations 2023, which has come into force with effect from April 1st, 2023. So for reinsurance business, as per market practice prevalent from time to time, for the settlement of accounts by insurers in respect of remuneration of insurance brokers shall be done on a month basis, and it must be ensured that there is no cross settlement of outstanding balances. Risk management services. Insurance brokers compliance means insurance broker can charge client fees and offer services to the client for risk management services or other identical services which is not a percentage of premium or claim amount as per the regulations, and the broker may undertake the activity for commercial risk only upon a written confirmation from the client. So the insurance brokers are not permitted to receive remuneration and reward under IRDAI regulations 2016 and fees for the same risk management services. Claim consultancy. Insurance broker may undertake claim consultancy only for commercial lines of general insurance business subject to certain conditions. For claims not exceeding rupees 10 crore, the insurance broker may undertake claims consultancy provided such claim does not emanate from a policy which has been placed by the same insurance broker. An insurance broker shall inform the authority within 30 days of acceptance of such claims consultancy by providing details. For claims exceeding rupees 10 crore, the insurance broker may undertake claim consultancy with the prior approval of the authority. So board approved policies are there. The insurance broker shall have the following policies like outsourcing policy, conflict management policy, policy for comparison and distribution of insurance products, grievance redressal policy, cyber security policy, corporate social responsibility or responsibility policy if applicable, and business continuity policy, anti-money laundering policy, anti-bribery and anti-corruption policy, prevention of sexual harassment policy, or any other policy to comply with provisions of law. As far as code of conduct for insurance broker is concerned, every insurance broker shall abide by the code of conduct as specified in Schedule 1st for match of broker regulations. In case of a composite broker or a reinsurance broker, he shall abide by the additional code of conduct specified in Schedule 1st for one of these regulations. It is the responsibility of the insurance broker to ensure in place a proper internal audit system and that it is adequate for the business. In case of reinsurance and composite brokers, so the insurance brokers must mandatorily have industrial audit system. So the provisions of Section 64 VB of the Act shall continue to determine the question of assumption of risk by insurers. In the case of reinsurance contracts, a fiduciary account need to be maintained to hold reinsurance money. In these circumstances, the money collected by the registered insurance broker shall be dealt with in the manner specified in Schedule 2nd for view of the broker regulations. Sealing on business from single client, the business of the insurance broker shall be carried in such a manner that not more than 50% of the remuneration shall emanate from any one client in a financial year. Foreign investors, including portfolio investors, shall not exceed such percentage of limit as prescribed by the central government. Outsourcing of activities by insurance broker. An insurance broker can outsource the activities as given in Schedule 2nd formats of the broker regulations based on a board approval policy. IRDAI do not allow core activities to be outsourced. A certificate of registration once issued to the insurance broking firm shall be valid for a period of 3 years from the date of issue unless the same is suspended or cancelled. An insurance broker shall disclose to the authority on their own any material changes which has bearing on their certificate of registration within 30 days of such changes. Co-broking agreement could be there. 2 or more registered insurance brokers can jointly handle the broking of insurance requirement of any client with the written consent of the client. So in such a situation, the registered insurance broker shall enter into terms of business agreement for providing insurance broking services to the specified client, and the agreement shall include, amongst other things, the manner defining the duties and responsibilities of each registered insurance broker, the manner of sharing of remuneration or fee among themselves, the reason for providing insurance broking services jointly. IRDAI will not allow core activities to be outsourced. And then this, as per the regulations or Regulatory and Development Authority of India, India will be the 6th largest insurance market within a decade, leapfrogging Germany, Canada, Italy and South Korea. So insurance market in India is expected to reach $222 billion by 2026. So there is a need of insurance brokers who can provide their services both in the life insurance, general insurance as well as in the insurance market. Thank you very much.